for Nordstrom's second quarter, reporting 95 cents earnings per share on a GAAP basis. That compares to analyst estimates of 84 cents. That's a beat. Revenues also a beat, $4.07 billion. Consensus was for $3.96 billion. Comps, those comparable sales, up 4%. Analysts had actually only been expecting those to be higher by 0.8%, so almost 4 times higher there. It looks like the full-price Nordstrom store, so the regular department store, saw their comps up 4.1%. Off-price up 4%, so almost on par there. We're also seeing full-year guidance raised to a range of 350 to 365. That compares to analyst consensus of 346, so that's also a beat. Digital sales up 23%. Now for the quarter, at least compared to last year, they make up 34% of total sales. That's really high for a retailer. Nordstrom's always been high, and it's just getting higher when it comes to that breakdown. Kids apparel and beauty, some of the strongest categories. Back over to you guys.
Okay, so hold on. I think now we have something to talk about, people, because
we've got a trend. We've got 2, Andrew.
We've got 2. We're almost at 3.
Macy's had a we good quarter.
Yeah, but then I got to throw JCPenney into the trash. But the
anomaly.
But the point you were making earlier was about what we were talking about, whether it's the economy stupid or whether it's these operations. And we were talking about the high end, the low end, where things are. Now you got it on both sides.
Certainly an indicator that the confidence is back, and I think we all want to see real wage growth. But you make a good point that is inflation eating it all. But the average person doesn't quite necessarily do that calculation, and maybe there's a little more in the pocket, and it feels like there's time to spend.
No, that's right. It's exactly right.
I'm trying to figure out the setup here for Nordstrom, because with Macy's, it was so much about the fact that there was such a run up into earnings, and it was actually a pretty good quarter. They raised guidance, and yet people saw it as a profit-taking opportunity. Nordstrom now up 12%. Hat tip to Jim Cramer this morning, who was saying, I hate to be Pollyanna-ish about retailers, but with the consumer spending number up 4% in the last GDP and some of these signals.
Who said fashion was dead? Nobody.
But here's
they did for up until basically the past 6 months.
To me, here's the bigger concern about online, about retail at large. $1 you make online, how much more or less profitable is it going to be for you than $1 you make in the store? There's been so much investment that's been put in the last 10 years. At a certain point, you're going to reach equilibrium, and maybe it's better for you to have an online dollar of sales as opposed to a physical dollar of sales. But I don't know if we've passed
ultimately think it's
that.
a higher margin dollar. So to me, the fascinating conversation, we always thought it was going to be a higher margin dollar online. I think long term it may not.
Look, the people who are involved in online advertising, who can take a very significant sum of your margin to make sure that you reach the person you want to. That's certainly a big weigh on those margins. So that's the long-term question in my mind.